Hello and welcome back to StockSage Insights. I'm Sarfaraz and today, I've got a real treat for dividend investors. We're diving into a stock that not only boasts a stunning dividend yield of over 8%, but also comes with a strong buy rating from analysts. Imagine locking in now and watching that yield potentially rise to more than 10% in the next few years. Are you intrigued? You should be, especially if you're on the hunt for a powerhouse in its sector, known for its impressive asset portfolio and robust cash flow generation ability, ensuring safe and sustainable dividends. But before we unpack this investment idea, a quick heads up about my next video. I'll be shining a spotlight on a hidden gem. It's a small cap stock that's brimming with growth potential and it is attractively priced. Don't miss out on this discovery. Make sure you're subscribed to StockSage Insights and hit that bell icon for instant notification when the video drops. Now, let's get back to the main event. Today's high-yield spotlight is on Energy Transfer, a titan in the master limited partnership space, with a towering market capitalization of nearly $44 billion. Energy Transfer isn't just big, it's a leader in diversity within its industry. Boasting over 125,000 miles of pipelines crisscrossing 44 states, this company is at the forefront of moving oil and gas products across the nation. But Energy Transfer's reach goes beyond just transportation. Their operations encompass storage and terminaling for an array of energy products, including natural gas, crude oil, natural gas liquids, and refined products. And it's not just about serving the domestic market. They're a global player too. Energy Transfer stands out as one of the world's most significant exporters of natural gas liquids, with its energy products reaching nearly dozens of countries worldwide. Alright, let's take a closer look at Energy Transfer's journey. From its humble beginnings in the mid-90s, this MLP has skyrocketed to become a major player in the midstream sector. Their growth strategy has been a mix of organic development, building key projects from the ground up, and strategic acquisitions. One of their latest moves was the acquisition of Crestwood Equity Partners, a deal that closed a couple of months ago and clocked in at $7.1 billion. Now let's shift gears to dividends, or as they're known in the world of master limited partnerships, distributions. Energy Transfer isn't just playing in the big leagues, it's outperforming them. With a distribution yield hovering around 8.96%, it's nearly touching that 9% mark. To put that in perspective, Energy Transfer is even beating the average MLP yield of 8.2%. But here's where it gets even more interesting. Energy Transfer isn't content with just maintaining its distribution rate. They're aiming for annual growth of between 3% and 5%. That's a promising outlook for any investor. And with this kind of growth trajectory, reaching double-digit distribution yields in the near term seems like a real possibility. Let's play with some numbers. If Energy Transfer hikes its dividends by an average of 4% annually, which is right in the middle of their target, we could see its distributions jump from $1.25 per unit to about $1.40 in just 3 years. At today's unit price of a little under $14, that could mean a yield of about 10.1%. So for those of you who are patient investors, double-digit dividend yields could very well be on the horizon within a couple of years. Okay, now it's time to dive deep and analyze whether Energy Transfer can sustain its impressive yields and support its growth ambitions. Let's roll up our sleeves and scrutinize their 10Q report. This financial snapshot will reveal if the company is actually generating enough cash, not just to maintain its distributions and fuel growth, but also to cover its capital expenditures. Keep in mind, Energy Transfer is heavily invested in growth projects and acquisitions to boost its earnings. These initiatives need significant funding. For the first 9 months of 2023, Energy Transfer had a hefty cash commitment. They needed to distribute $3.1 billion to common unit holders, and another $1.3 billion were needed for non-controlling interests. Add to this, their capital expenditures amounted to $2.4 billion, plus $1.04 billion spent on acquisitions. Combine all these figures, and you get a total cash outlay of $7.9 billion. That's the target they needed to hit to comfortably fund distributions, capital expenditures, and acquisitions. And guess what? Energy Transfer didn't just meet this target, they exceeded it. The company generated a cool $8.26 billion in cash. That's not just meeting the mark, that's surpassing it with room to spare. This performance is a strong indicator of the company's capability to not only sustain its operations and distributions, but also to fuel future growth. For investors, this is a reassuring sign of the company's potential for increasing distributions down the line. However, it's crucial to remember that Energy Transfer is playing in the unpredictable energy market. This sector is known for its volatility, largely influenced by fluctuating commodity prices and varying consumption patterns of energy products like crude oil and natural gas liquids. This volatility is a double-edged sword. It can significantly impact earnings. In fact, we've seen this in 2023. During the first 3 quarters, Energy Transfer's revenue took a 16% hit compared to the same period in the previous year. This highlights the inherent risks of volatility in commodity prices and demand, something every investor should weigh carefully before jumping into this stock, or any energy stock for that matter. Now, let's talk about really matters for income-focused investors, and that is the company's sources of income and cash flows. Energy Transfer has consistently demonstrated its ability to generate ample cash flows to cover all its distributions and capital expenditures, as evident from its performance in 2023. This financial strength primarily comes from the fact that about 90% of its earnings are derived from fee-based businesses. Being a pipeline operator, Energy Transfer earns its keep-through fees charged to other energy companies that use its pipelines. These fees often come from take-or-pay style contracts, providing the company with recurring and reliable returns. Another aspect of Energy Transfer that catches my eye is its proactive cost management. Despite the pressure on revenues in 2023, the company has effectively controlled its costs. They've managed to reduce the cost of goods sold and kept a tight leash on selling, general, and administrative expenses. This cost-cutting strategy has paid off, allowing Energy Transfer to increase its operating income by 13%, even amidst declining revenues. It's no surprise then that analysts are sweet on Energy Transfer, giving it a consensus buy rating. And why wouldn't they? With a distribution yield hovering close to 9% and potential growth pushing that yield over 10%, Energy Transfer seems like a solid choice for those seeking reliable income from their investments. Now, before we conclude, let's touch upon a crucial aspect of investing in Energy Transfer, its tax implications. As a master limited partnership, Energy Transfer enjoys a unique tax position. Unlike typical corporations, MLPs don't pay corporate income tax. The tax responsibility is passed directly to unit holders. Once a year, as an investor in Energy Transfer, you'll receive a K-1 statement detailing your share of the net income, which is then taxed at your individual rate. While this might sound daunting at first, once you get the hang of it, it's pretty straightforward and manageable. In short, I believe Energy Transfer is a company that not only promises high yields but also has the financial muscle to sustain them. Remember to always consider your investment goals and tax situation before making a decision. Before I sign off, I need to remind you that what you've heard today is purely my opinion, not investment advice. I hope you found this video helpful. Don't forget to hit the like button and subscribe to StockSage Insights. Up next, I'll be revealing a little-known small-cap stock with big growth potential, so stay tuned and hit that bell icon for notifications. If you find my content valuable, consider backing me on Patreon. Your support on Patreon is invaluable, and with your contributions I will be able to publish even more videos every week. You can also support this channel by sharing this video. Stay tuned for more insightful investment content. Until then, keep investing smartly.